Hello, everyone. This is Blane Markham, the Chief Trading Strategist here at Markham Trading and the Optioneering team, coming to you this week with my weekly market update, breaking down the technicals, showing you what is standing out in the charts to me, and what I think is most important that our team is focused on, and I think you should probably be paying attention to as well. So with that, let's go ahead and dive into the charts here. This here is our first chart we're going to look at. This is a chart of the S&P 500 headline index right here. I always like to start off with this one when I'm giving my weekly market update because it really helps to give you a feel and take the temperature of what the overall broader market is doing. And so here you can see still very much the same that we've gotten over the past couple of weeks. Largely we're still seeing the S&P 500 index remain range bound between that 7,000 on the top end, 6,800 on the lower end. Again, this week we've gone down and tested that floor of support at 6,800 in the Tuesday trading session. You can see we've clearly tested that successfully as we've closed above it for 3 consecutive sessions. We certainly have one more trading session to go here as we do head into Friday. So still remains to be seen exactly where things will close on the week, but still we're seeing that level of support still hang in there. The market, every time we trade down there, we're starting to see the buyers come in, the market's catching a bid and, buyers are continuing to buy the dip at that level. But it seems we're starting to test that floor of support with a little bit higher frequency here. You can see we've already tested it 3 times here this month with the index trading down to the 6,800 level on 3 separate occasions, barely trading above it right now. And so seeing this higher frequency of trading down and testing that floor of support, that's certainly a lot more frequent than what we were testing it, in January and December. So, if we continue to trade down to that level and, bounce off that level, odds are likely we're going to eventually see this index trade down through that 6,800 level and, see probably a little bit further of a breakdown from there. One other thing, too, that has really stood out to me this week is that, of course, in last week's trading, we traded back down below our 50-day moving average right here. That's our red line right here. And so that was the 4th occasion that we've actually done that here recently, just in the past couple months. But what makes it this time actually stand out and is a bit unique from the previous 3 times is that after last week trading down below the 50-day moving average, we actually have not recovered right back above it. So you can see on the last several occasions this occurred here in December, here in January, actually earlier this month and back in the early part of February. You can see every time we closed down below it and we're testing that 50-day, we traded almost immediately right back up and traded back up to new all-time highs on the index. You can see that that did not happen this time. We actually traded down below it. And ever since then, for the past 4 trading days, we've actually remained below it. So actually giving some confirmation to that move to the downside that we're actually now confirming the move below the 50-day moving average. And we have tried to actually rally. You can see that actually in the Wednesday trading session right here, we tried to rally off of that level of support down at 6,800, pushed up, tried to push up to 6,900, and ultimately the rally failed at 6,900. And seeing the index close below the 50-day moving average once again. So while we are still in a longer-term uptrend, of course, with the index still trading above our green line down here, it's our 200-day moving average. We certainly are still seeing some shorter-term signs of trend deterioration and seeing momentum certainly fade here, at least in the short term. It remains to be seen whether we're going to completely have a trend reversal here and actually go down and test the 200-day moving average on the S&P 500. Perhaps that's something that we could be setting up for here in the weeks and months ahead. But it is certainly clear here, looking at the chart for the S&P 500 headline index, we without a doubt have lost that momentum factor to the upside. Now, a couple other things here in the chart that stand out that help to actually show some more evidence and build that case that I'm explaining to you now is you can see actually our middle counter channel here. This is just simply a 20-day exponential moving average. You can actually start to see that now beginning to slope down as here over the past couple of weeks. And also, too, looking down here below, we can see this is just a simple MACD chart, MACD chart here as well. And so you can see our black line here is our MACD line. It's been sloping down, making these series of lower lows and lower highs, really ever since midway through January here, back when we made the last all-time closing high in the market. So you can see it trending down ever since then. And actually here, just in the past couple of days, you can actually see our MACD line fell below the level of 0 right here, falling into negative territory. And actually, the last time that occurred was if you look back to November, when we had a bit of a sell-off. If you remember from last year in November, that's actually the last time that this line actually turned negative. So some of these things that I'm pointing here in the chart to you could possibly be foreshadowing that we might have a little bit further downside to go here in the weeks ahead. And so I also have another chart here that I want to show you that helps to also further illustrate the point that I'm talking about. And so this is a chart of still the S&P 500 headline index right here. But this is, instead of a daily price chart, this is actually a weekly price chart. And the blue line sloping through here is actually just a 4-week simple moving average. And so I think this further helps to illustrate what I'm talking about here. You can really see, ever since the beginning of the new year, coming off of this high right here, the last time the market made a new all-time closing high, you can see we've been a bit of a drift lower. The index, finally, that's the last time we had an all-time high here. And really ever since then on this weekly chart, we've been making this gradual series of lower lows and lower highs. And now we're finally starting to see this 4-week moving average starting to actually slope and turn down. Now, again, we have another trading day left in this week, so it's, remains to be seen exactly where things will end up for this week. But you can still see we're still continuing to make that series of lower lows and lower highs still here on this weekly chart. And while support at 6,800 has continued to hold quite firm, if we continue to see some selling off to the downside, still putting in some lower lows and lower highs, eventually we're likely going to break through this level. Now, again, this is largely because of the selling pressure that's going on in tech. We have seen a significant broadening out across the market, which has been great. You're seeing a substantial number of S&P 500 stocks participate to the upside, but those really heavily weighted mega cap tech names, the most heavily weighted names in the S&P cap weighted index, a lot of these names, their charts look broken. They're not participating to the upside. Some of them are actually selling off quite substantially to the downside in the tech and software spaces of the market. And so it's just a mathematics problem. At some point, unless those stocks begin to participate again to the upside, there's only but so far the rest of the S&P 500 index can carry the actual cap weighted index performance, just because those stocks are just simply not carrying enough market cap to move the needle. Now, with that said, there certainly are some other great opportunities out there in the markets that, not every index, is starting to show some signs of slowing like this, and certainly the NASDAQ that's even more tech heavy than this. If you were to look at an equally weighted version of the S&P 500, still a very constructive chart there. Of course, looking at the Dow Jones Index, very constructive movement there. Also, too, just still looking at small caps, even some opportunities international. There's still some very great bullish opportunities out there in the market. But just taking a look here at the S&P 500, our favorite gauge of the market, you can see still some slowing. But again, like I said, there's still some great opportunities out there developing. If the action is just not here in the S&P 500 cap weighted index like it has been over the past couple of years. But one of these opportunities out there that we have spotted, and it's a very strong breakout that's been in progress, is actually one that's showing up in this chart here. So let me explain this chart to you. So this right here is actually a ratio chart. It's looking at a ratio between the price action and performance between the IYT transportation ETF and then the S&P 500 index. So since this is a ratio chart, all you need to know is whether this line is sloping up or sloping down. So we're comparing the price of the transportation ETF relative to the price action and performance of the S&P 500 index. So when this line was sloping down for much of last year, of course, this was meaning that the S&P 500 index was outperforming relative to the transportation ETF. Well, you can see that this actually had a relative performance bottom here in late October and November, and ever since it's been putting together a very constructive series of higher highs and higher lows, meaning that the transportation ETF, so this pocket of the market right here, the transportation stocks, are broadly displaying very powerful price action on the upside. And you can see this as the transportation ETF has strongly outperformed the index here over the past couple months. And our team actually spotted this breakout relatively early on. We actually spotted it as it was starting to break out in late November into early December. And at that point in time, we started looking for opportunities in the transportation space. And so the opportunity we spotted in this pocket of the market was actually with this stock right here. It's FDX. This is FedEx. And we saw this breakout actually happening in November, in December. And, right now, this is one of the cleanest charts I've seen across the market. This breakout here is very, very powerful. One of the cleanest series of higher highs and higher lows I've seen, really across the market here in the past couple months. But we spotted this trend getting underway in November and into December. We're starting to look for different ways to gain some bullish exposure to this trend, to be able to put out some trade alerts to our members so that we could have some potential opportunities to benefit to the upside. And in mid-December, roughly right around here, after FedEx popped here to some new all-time highs, the stock pulled back into the upper Keltner channel right there. That's when we sent out the initial trade alert to the members of one of our trade alert services. And then shortly thereafter, you can see the trend resumed higher, continued to trade higher from there. And so, of course, the trade alert was a bullish trade alert, so it was continuing to perform quite nicely as the stock was trending higher from there. And the trade was set to expire midway through January, so we actually waited for the stock. After it had gotten overbought again in early January, we waited for it to pull back roughly down to the middle Keltner channel right here. And it was right around here where we actually sent out the follow-up trade alert to go ahead and take profits on that original position and go ahead and roll those into a new position, because we still really like the trend here for FedEx. We thought it still had plenty of legs and had room to run further. And as you can see, shortly after we sent out that subsequent trade alert, the stock actually took a very parabolic, notable leg higher. You can see it just took a massive jump higher to new 52-week highs. And of course, the stock right now is trading in rare air. It's very overbought. It's been trading above the upper Keltner channel for quite some time. It's been on just a stellar run lately. as the stock has been a major beneficiary of the rolling rotation we've seen kind of under the surface of the market here lately. But still, this is a trend that we really like. It's one we're still watching very closely here because we still have this trade alert open for the members of our CCT trade alert service. And this trade alert is still performing very well. And actually, following the close of Thursday's trading session, this trade alert was sitting on an open profit opportunity of just over 70%. Now, I certainly hope that you've been able to follow along with this trade alert and have been able to benefit to the upside following along with the performance of this trade. But if you have not, it's totally okay. Don't worry about it. I'm going to go ahead and share with you right now how you can ensure that you begin receiving these trade alerts just like this one we sent out to our members for FedEx, possibly as soon as today. So if you want to go ahead and get signed up and make sure that you begin receiving the trade alerts just like that one I shared with you there for FedEx that we sent out to our members just a couple weeks ago and is sitting on a very strong open profit opportunity, go ahead and give our team a call. This is where you can reach them is 310-647-5664. Go ahead and give them a call. Please feel free to ask them any questions you want to about our strategies, our trade alert services. They're there to help you. They're there to make sure that you have all your questions answered. Most importantly, to go ahead and get you connected with our trade alerts to help you to join our team so we can begin to deliver these trade alerts to your inbox as soon as we spot the next best opportunity. So go ahead and give the team a call. Now, to conclude this week's market overview, we do have a big event coming up in the Friday session to close out this week. We do have a PCE inflation report coming out tomorrow. Certainly probably going to be a market moving event because it could dictate what the Fed is likely to do at their upcoming meetings. It's going to be a really key inflation data point there. Also, too, next week, we have a big catalyst. That's something this market has really kind of been absent of here in the past couple of weeks is, earnings really were not a positive catalyst to the upside. So this really seems like a market that's in search of a catalyst to really restart this rally to the upside if that's what we're going to actually have happen. And so next week we have a huge earnings report. It's probably one of the most important ones of this earnings reporting season, and it's NVIDIA. They're coming up on Wednesday. Certainly there's going to be a lot of eyeballs on this earnings report. And so this is certainly something our team is watching very closely next week. They're going to be reporting after market close on Wednesday. So that is what our team is watching here in the coming days ahead. I hope you enjoyed this weekly market update. Thank you so much for tuning in, and I'm looking forward to putting this together for you next week. But until then, hope you have a great rest of your week and weekend, and I'll see you back here soon. Thanks so much for watching.